next presentation is on a non-bank view on payment opportunities by Gavin Reubenson from PayCorp. Gavin joined PayCorp in 2000. He's the CIO of PayCorp at this point in time. He's been involved in ATMs, merchant acquiring, issuing, and other value-added services. He prides himself on delivering the best customer experience across PayCorp's various payment channels, ensuring that people always have convenient and safe access to their money. So, Gavin, you're more than welcome to join us here. On his way here, I'm just going to ask the following question, and the question is, Gavin, do you have a Sean approach? And if I may, in your non-bank approach to this, will you cover issues such as competition, collaboration, isolation, co-opetition? All over to you. Ladies and gentlemen, let's welcome Gavin.
Great, thank you, Pierre. And I just want to say thank you to PASA for the opportunity to speak here and also congratulate them on a really well-attended conference. So I suppose just before I kick off, I've actually managed to get a bit of comfort over the last couple of slide decks that my deck actually has some of the same trends and stats that have been spoken about already. I thought a great place to kick off would be this image that I recently saw at a conference in Europe, which really simply captures and illustrates the payments landscape over the last half a century. Even though there have been major leaps in technologies and additional payment methods that have been adopted, the trusted few, such as cash, cards, and even check in some markets, have really stood the test of time. This image is also not a complete list, just because of the mass adoption or acceleration over the last couple of years. Merchants, cardholders, banks, and non-bank participants need to start thinking about what the optimal mix of payment solutions look like, which to invest in, and which will be adopted. So I pulled out a few that stood the test of time, and cash and card, which have probably been the most widely adopted payments methods that have not only stood the test of time, but have also set the benchmark for the exchange of value or enable transactions to happen between people and people, people and business, as well as business and business. The attributes of cash and card that people are comfortable with, coupled with the widespread rollout of ATMs and POS machines or merchant acquiring terminals as transaction channels, means that any new technology introduced either has to meet or beat these methods. At the very least, any new technologies would probably have to integrate or be interoperable with these technologies in some form or another to get traction. If I to use South Africa, which is still considered one of the top payment systems in the world, as an example to illustrate the penetration and the use of the most common payment methods, we have a population of 54 million people, of which 67% of these have access to banking services. Through 66.6 million cards, of which 59.3 million of those are debit cards, the rest are credit cards. There are about 3,000 bank branches, over 30,000 ATMs, and over 280,000 points of acceptance in either multi-lane or standalone environments. As Johanni alluded to, the number of debit cards increased significantly a few years ago with the introduction of the SASSA cards or the government grant card, which converted over 10 million grant recipients from cash to card. But how do the South African consumers like to transact? Well, 88% of them draw cash at ATMs at least once a month. 25% of them draw cash at a retailer through cashback at POS. And 34% of them draw out the entire amount as soon as it's deposited into their account. And according to MasterCard stats, 7 out of 10 retail transactions are still happening in cash, all of which would probably explain the 10% year-on-year increase in cash in circulation. And although cell phone banking is starting to get some traction, I would say it is still mainly linked to a traditional bank account or card. It's also been a busy few years in South Africa. Actually quite amazing having a look at the slide deck, at this particular slide, which is full of payment solutions, technologies, and options that have been introduced into our market over the last couple of years. This, again, is not a complete list, but really does illustrate a fluid and changing landscape which covers everything from domestic money transfer to cross-border remittance, M-POS solutions to online escrow, authenticated mobile transactions to cardless cash withdrawals, and even QR codes enabling you to pay for parking, and of course cash, where Uber used South Africa as the first market in the world to accept cash payments. Anecdotally, I took Uber in here this morning and I was talking to a driver what the introduction of cash into their ecosystem looks like. And he said, firstly, it's increased the number of passengers, and that 6 out of 20 passengers a day are using cash to pay for their rides. But even with all this innovative technology, I would have to say that each of these solutions either leverage card or cash in some way or another to either initiate or finalize a transaction. But we're not done yet, and there's a lot still going on. Some of the initiatives that I've listed in the top half of the slide are world firsts that have either been conceptualized in South Africa and used elsewhere in the world, or driven by the payments bodies and banks in South Africa, which are really the catalyst for pushing global standards to be developed, such as the biometric CVM that is currently underway with Visa or MasterCard, or the Softie Pay that MasterCard alluded to, Selfie Pay that MasterCard alluded to earlier. These new solutions need to drive financial inclusion, or even financial deepening, as we heard earlier, bringing people closer to their money and businesses closer to their customers. Some of the examples that I'd like to touch on as examples that are bringing mobile money or mobile wallets back into the traditional landscape could be the companion card that Tutuka has been rolling out in many developing markets where mobile wallets have been widely adopted. These cards integrate into these wallets as a store of value and really bring that money back into the traditional landscape, allowing those wallet holders to now transact at point of sale or even draw cash at ATMs. Another example is where we introduce carrier billing, where we use a virtual MasterCard in Southeast Asia as an example in the iTunes account where you need a credit card to enroll in order to buy content. Basically, we issue a virtual MasterCard, which you set up in your wallet, but the store of value is really your airtime balance. So every time you buy content for an app for $1, the MasterCard would then transact and ultimately debit your mobile wallet. And I've got a recycling ATM up there, which was introduced as a low-cost disruptive technology that has opened up the merchant-replenished ATM market in Eastern Europe, where they have requirements for every note passing through an ATM to be validated for counterfeit or fitness. Some of the big names on the global stage, which I've listed in the bottom half of the slide, are really starting to get traction here in South Africa as well. I said I didn't think it would be long till we saw things like Samsung Pay picking up, and here they are with a booth outside the conference room. So how do we filter through these, through this enormous amount of data, either coming at us through news, blogs, various industry channels? At PayCorp, we basically put together this, what I'd like to call the filter system, where we try to gather all this data coming at us and try to define which ones we want to pursue and which ones we should just put in the parking lot or ultimately not pursue at all. There's a lot of homework that needs to be done. We need to decide what's going to give us the quickest return on investment in the shortest amount of time. We need to answer questions like, what is a complete new piece of development or a complete new product? Or what is just a simple bolt-on that can easily or rapidly increase the number of transactions or even just transaction revenues? For example, cardless transactions or even dynamic currency conversion. While keeping in mind that not all solutions will meet the requirements or expectations of all markets. One of the main lessons that we've learned is that we can't dance at all the weddings. We're just going to get tired. So in other words, you have to be selective about which projects you choose to take on, as everything we decide to do is at the direct expense of something else. An easy example that I can put out there is having to build infrastructure or integrating into a new bank in a new country where the scope may only be 50 to 100 ATMs in the short or medium term, where we could be installing the same amount of devices in one of our primary markets in a single month. In the next two slides, I'm just going to take a look at two real-world examples. The first being the journey of EMV, and the second, a disruptive technology that has changed the acquiring landscape. Nancy O'Malley had a similar slide earlier in the MasterCard presentation. Hers, I suppose, just ran vertically. But a few years back, it all really started with a magstripe card and a POS machine where the cashier had to take the card from the cardholder, swipe it through the terminal to initiate that transaction. A few years down the line, EMV was launched with a distinct focus on security and safety. The technology changed, but it was still the cashier's responsibility to ultimately take the card and insert it into the terminal, and then handing the terminal to the cardholder for a PIN, or if it was signature-based, to get them to sign. We're now in the journey of moving into the contactless phase, which has the same security and safety features introduced with EMV, but starts moving control from the cashier to the cardholder. This is still in the early days in South Africa, but in Europe, more than 70% of face-to-face transactions are already contactless, according to Visa. From here, because the terminals are contactless ready and the cardholders are starting to get used to being in control of the transaction, the contactless cards can easily be stored as a digital card in a wallet on a smartphone, making products like Samsung Pay or Apple Pay a reality. The next example I pulled out was the disruptive technology, which really started with Square in the US a couple of years ago with their $5 reader and easy sign-up process. They turned smartphones into card acceptance devices using an app and an audio jack card reader. The solution was limited to magstripe and had zero transaction security or encryption. It then started to snowball when the first EMV and PCI certified Bluetooth device started to become available. These devices sported a form factor that was familiar to retailers, quite similar to that of an integrated PIN pad that you'd see in pick and pays or multi-lane environments. So it was recognized and trusted by cardholders and has security features such as full point-to-point encryption, which means that the phone never actually sees any sensitive data. Fast forwarding just a year or two, this has transformed to the picture on the far right-hand side into fully integrated Android and MPOS device contained in one unit, which lands at a fraction of the cost of the traditional POS machine that I've got on the left there, and is also capable of so much more. A lot of these newer devices can also be cabled instead of Bluetooth connectivity, which allows them to become point-to-point encrypted PIN pads in multi-lane or integrated solutions. They've been used for queue busting internationally, and examples have recently been adopted and tested in retailers like Mr. Price here in South Africa. Convergence with other payments methods is also starting to happen, like the recent launch of MasterPass within the Coca MPOS solution here. These solutions have also given rise to what's being called smart POS or second generation point of sale. They create more stickiness. For example, First Date in the US have launched their Clover, and other terminals like Point that have full inventory management systems and seamless integration into merchants' back-end systems, allowing for easy reconciliation. But while it's important to keep innovating and moving forward in this ever-changing landscape of payment solutions and products, I think it's imperative for one to keep their eyes on their primary flywheel or core business. To briefly touch on three areas and ensure that our core offerings in our core territories can operate efficiently, contribute meaningfully, and deliver solutions while delighting the customers. We need to ensure that every transaction counts. So as a business, we need to make sure that we can add additional offerings onto onto the network that we've already put out there. We need to be able to leverage that ecosystem. So how do we cross-pollinate or put products across the multiple payment streams that we participate in? How do we contain costs? And how do we eke out as many efficiencies as possible? In terms of customer delivery, I think Nancy said it well earlier as well, the focus is always to deliver the best consumer experience. So what is the customer experience out there? How good is our distribution? And are we really getting them in close proximity to where people live and ultimately work? What functionality are we giving them, and are we up to date with compliance? Two examples I can maybe just throw out there in terms of customer delivery that we think about all the time is that the SASSA grant recipient that goes to one of our ATMs on the first of the month tries to draw money. I think, let's say they get 1,000 Rand, and they go there to withdraw that whole amount out to keep them going and buy food for the rest of the month. If that transaction isn't successful, the knock-on effect is huge, where they have to go log a query with the bank that goes through the whole process, ultimately gets to us. We see whether it was successful or declined. We then respond saying credit the money. The guy only gets his money at best 2 days later. It could be longer, and then the whole process has to start again. So, I mean, that's one example of how we could negatively impact somebody if service delivery wasn't good. And rising to the challenge of doing business in developing economies, I would say even in mature markets, some of these happen. But, you know, here in South Africa, physical crime, having a big ATM network, ATMs get bombed or cut open or attacked on a daily basis. There's cybercrime. He only alluded to the amount of cybercrime in the country. And other developing market considerations, such as power supply. As an example, in Zambia, the power supply went for a complete turn of the worst as we were rolling out our ATM network, so we had to come up with ways to mitigate that. How good are the communications? What's the note quality like? What is the note supply like? And dealing with civil unrest. So just some parting insights to pull it all together. Innovation is really a culture, it's not a technology. Alternatives need to significantly improve customer experience in order to be adopted. I believe that we could be cardless before we are cashless. As South Africans, we straddle the first and third world and therefore have developed innovative payment solutions that have relevance elsewhere in the world. Digital transactions still generally either start or end in cash, and you need to invest in innovation. In payments, if you're not moving forwards, you're actually moving backwards. Thank you.
Thank you, Gavin. You covered solutions, technologies, and products, and also in one of your last slides, you cover the aspect of the ecosystem. And I guess I have to just give you the context of my Sean approach. If we look at the non-bank participation, and I know this is customer-based, but in future we know non-banks will become part of the PASA environment, membership, or whatever is going to result from this PASA review. And hence my question, the collaboration, competition, isolation, and co-opetition. My question, Gavin, to you is, where do you see the non-banks participate in future to leverage whatever you are proposing here?
Tough question with banks in the room. No, I'm joking. I think at PayCorp we've always believed in co-opetition, if you like, where we collaborate as well as have to compete. And that really started out in our ATM business, where we in the current landscape where you have to have a bank to be part of the national payment system, and you're collaborating and you're working together to get the bank's brand out there, but on the ground you're really competing for the same sites and where to install those machines. You could also say that a lot of innovation has come from non-banks in the recent years. and it might just be they're smaller, a little bit more nimble. But the reality is it would not be possible without the banks having put the kind of the railway tracks out there to start off with. So I think going forward, it's actually a very exciting time in the payments industry in South Africa, where it is opening up to more participation of non-banks in the national payment system. But I still do believe that it will be a collaborative effort to make it work.
Thank you, ladies and gentlemen. Any other questions? Questions? As a small sign of our appreciation, Gavin, thanks a lot.
Thank you, Pierre.
For the insights on non-bank payment opportunities. Thank you. Thank you then.